Hey guys, what's going on? Abdel Kuatmi, Tuesday Tips with your favorite mortgage lender. Today is August 31st, 2021. What I want to talk about today is in regards to housing affordability and whether if housing affordability is just about the money, there's a lot of different things that we also need to keep in mind of, not just home appreciation and overpaying more or less for a home. So there's many different non-financial benefits of owning a home. However, today's headlines, guys, seems more focused primarily on the financial aspects of owning a home, specifically in regards to affordability, like I stated. There's a lot of different articles and a lot of different experts. And we all know how the media portrays certain items, making a claim that it's actually not affordable to buy a home in today's market. But let's be honest, that's not the case. Remember, when it comes to renting, how it works is owners build their wealth, while renters do what? They build their landlord's wealth. I'm going to repeat that. I read that and I loved it. Homeowners actually build their wealth through equity with their mortgage payments, as opposed to renters pay their landlord. Therefore, they build their landlord's wealth. Okay? Owning is obviously a better long-term decision than it is renting. So if you're looking to move, or you're still trying to get acclimated with a specific environment, and you're still just getting married or so on and so forth, and not looking to stay in a specific area, then maybe renting would be something that you'd be looking into. So owning is definitely a better long-time decision than it is regarding renting. Now, home prices obviously have driven dramatically over the last 18 months. And in reality, mortgage rates, though, simultaneously have remained historically low, especially with the impact of COVID that we recently went through. Because of these super low interest rates, mortgage payments are actually more affordable to a lot of most buyers than they were in the past. Homeowners are less affordable than they were last year. Yeah, I'll be the first one to tell you that. I did a video actually the other day in regards to this only 2 times in history in the last 45 years were home prices actually not as affordable as they are now. And that was last year with super low interest rates, and then simultaneously we had the prices were more or less plateaued, and then again in 2010. Those were the only 2 times in history where housing affordability actually was a little bit higher than it currently is right now. So while homes again are less affordable last year, they're adjusted based on inflation. Inflation is the cost of something currently in today's market, continuously increasing, like I mentioned before, with bread, water, and so on and so forth. But it is a lot more affordable than it was, as I mentioned in my previous video, in 2000s, 80s, 90s, and most importantly in most of the 2000s. Now, today's buyers, guys, I'm going to throw a lot of statistics out today because I found it really relevant in regards to what we're going to cover. Today's buyers are actually spending approximately 20% of their income on their monthly mortgage payments. And this is from a statistic through Freddie Mac, who's actually one of these secondary market holders. This statistic specifically tells us 20% of their income is producing what they currently can afford. The guideline of the max that clients can generally qualify for is actually 28%, meaning that the loans that are being done through various mortgage lenders shows that they are qualified mortgages. They are proof that they have the ability to repay the loan when Freddie Mac is advising us that the statistic in regards to qualifications is actually at 20% of their income based on their debt to income. Now, how we attribute this is we have to take the gross monthly income of the consumer, which includes in regards to anything after that from their debt, which is their mortgage payment plus their revolving monthly payments. So it's not that homes are not affordable, it's that they're less affordable than they were currently in today's market. So home prices are obviously rising. And again, guys, it's true that homes are less affordable than they were in the market crash from 15 years ago. Headlines making these claims are actually not wrong. It's true. I'll be the first one to tell you that. But they're not telling you the entire whole story as the media generally portrays. A closer look at affordability, which I'm going to discuss with us, actually goes further and reveals that, as I mentioned earlier, it is more affordable to buy a home currently in today's market than any time from 1975 to 2005. So in a 30-year span window, it's actually still affordable purchasing a home in today's market, given the context that I'm going to go over right now. So those that are trying to buy a home in a rapid home price appreciation market, which we're in today, it's obviously intimidating. I'll be the first one to tell you that it's 5%. Your mortgage was actually $230,850. Your principal and interest, just from that alone, with the other costs of expenses, is actually only $1,720. And then what he actually did also is took a look at the appreciation, where your home is going to appreciate in an estimate of value comparably for a monthly appreciation up to $3,550 is essentially the payment that you're making in regards to what you're yielding in a return. So we can actually see equity is gained month after month, and those consumers are going to essentially benefit from paying that less of a mortgage payment in regards to the increase. Now, the median rent in that specific area, and one of the experts picked those areas because that's the median threshold in regards to the market. So the median rent in that area was actually $1,310. So it was approximate saving of about $500 upfront temporarily. But again, let's not forget, when we're building equity, it's built into the equation. Aside from equity, you have the flexibility to do certain things to your home that will actually increase the appreciation, such as addition, kitchen remodeling, and various different platforms that actually give a lot of different clients the opportunity to tailor their home. When you're unfortunately renting, generally you do not have that capability to make those certain adjustments. Thereafter, throwing your money and simultaneously not being able to take advantage of the appreciations. If there's anybody who's in a position currently to take advantage of these markets, it's current homeowners who are actually looking to do a lot of refinances and take advantage of a lot of different markets. So if you're somebody who's currently on the fence and actually going back and forth in regards to figuring out if now is the right time to currently purchase, these are a lot of different things that I would recommend that you do keep in mind, because there's a lot of different factors that come into play when you're looking to purchase a home. Another thing I wanted to cover with us is something called the appraisal gap. So what's happening right now, what does an appraisal gap mean? So breaking it down as simple as possible, what we are currently going through right now is a supply and demand concern in regards to home. Home prices are obviously naturally rising. What's happening in today's housing market? Very straightforward. With home prices actually appreciating at this super low historic rates, it's creating a lot of different challenges for some of my home buyers in regards to them offering significantly higher amounts in order for them to stay competitive. So for those clients and first-time home buyers, or specifically our agents, you're going to run into what's called the appraisal gap. What does that mean? When an appraisal gap happens, basically what it is, it's heightened by specific buyer demand. Again, the market's a lot different than it was in the past. The media is not going to portray it that way, but the specificness of, if you've looked at a home and you fell in love with it, you already know you're going to go in there trying to put a super high offer to beat other would-be potential buyers. The appraiser's going to come in, and there's 3 different approaches that are taken when you're purchasing a home from an appraisal perspective. What it is that you have the sales comparison approach, which is basically the appraiser taking a look at all the different homes in the area and taking a look at them within a specific time frame, whether it's 3 months, 6 months, or depending on the units, even longer, and finding out how much did those homes sell within that specific time frame based on the specs of that home. The number of bedrooms, bathrooms, square footage, pool, finished basement, attic, all those factors come into play. Then you also have what's called an income approach. If they're getting a multifamily home, they need to take a look at the income and find out what is it that they're currently assimilating and what's their return, so they can give that for rental, or they can give that for 75% of prospective rental from an FHA. And then you have the cost approach. If it's a unique home, they cannot find comparables, they're going to give you simultaneously the cost approach, where we will thereafter base it off of the home amount. So it's super important for everybody to understand that the appraiser's job is unbiased. It has nothing to do with the lender. Has nothing to do with the realtor. He is an unbiased third-party professional that is licensed to take a look at the specific comps that are in the area and give us the comparison. Regardless of whether the house appraises for the value or under appraises, the appraiser has a due diligence job in order to do it. So what does that basically mean? Home buyers who are willing to offer to pay more. The appraisers are going to assess the market not based off of the sale price of what you're offering, but based off of what the home is actually worth. So appraisal gaps now are actually starting to increase month after month. In May of last year, it was about 7%. In October, it was about 11%, and it stayed at 11% from August to December. Currently, right now, well, the last statistic that's available is between April and May, and it actually jumped up to an appraisal gap difference of 19 and 20%. What does that basically mean? The importance of you trying to go and offer a home is to have knowledge in regards to what you're looking to do. The best thing that you can do is coordinate with your real estate agent and get comparables. Put yourself in an understanding that if you're looking to offer $30, $40, $50, even $10,000, $20,000 more than the home is listed for, be prepared to cover that difference if you're waiving the appraisal. There's a lot of different tactics that are involved too. Through an escalation clause, there's a lot of different contingencies that can be made, not just waiving the inspection or waiving the appraisal contingencies. So the most important thing that you want to do in that specific scenario is lean on your real estate agent and simultaneously your mortgage lender. You want to find out if the house under appraises from a financial perspective. What are their different game plans, or most importantly, options that are available for you that can be tailored to your specific situation in order for you to understand, do you have the adequate money and most importantly, the reserves to cover the shortage? I cannot tell you guys how many different scenarios I've run into with my team where some of the clients wanted to waive appraisal and offered a certain amount, and then guess what happened? The house under appraised and we now have an issue, okay? Because the clients do not have the money, and a lot of sellers are catching up on that and they're asking for proof of funds up front in case the house under appraises. So whether you're a buyer or you're even a seller, the most important thing is to find that trusted advisor as a seller through your agent for comparables, because you don't want your house to sit on the market for a long time, because then what's going to happen is a lot of people are going to question, why is your home currently sitting on the market? Super important for you to understand that, because in today's real estate market, it's very important for you to stay informed with the latest trends. And I don't mean weekly or monthly, daily. A lot of different factors are coming into play, from international law into what's going on in today's market that can affect mortgage-backed securities for interest rates, the treasury yield simultaneously. Interest rates are going to start increasing towards the end of the year. The Fed is going to start practicing slow tapering, meaning interest rates are going to drastically go up. I don't mean drastically, they're just going to go, we're no longer going to see interest rates in the low twos. They're slowly starting to trickle back up into high twos to mid threes, depending on the client's credit, down payment, and home type. Those are a lot of different things, a lot of different information that I've just given you guys. 2 different topics that we discussed today, which is essentially in regards to the affordability for homes. The most important things I want us to catch up on is in regards to affordability. It is not unaffordable to purchase a home today. It's just less affordable than it was last year and in 2010. But in the last 45 years, those were the only 2 instances where it was unaffordable to purchase a home. And then simultaneously, we talked about the appraisal gap. Make sure if you're a consumer, whether you're a buyer or a seller, you understand what is the contingencies that are involved when you're placing your offer. What does it mean, and what's your level of exposure in regards to an appraisal gap if you're looking to have an appraisal gap, and understand what needs to be done to put you in the best situation to purchase your home financially, and both in a perspective that doesn't hurt you in your pockets. Thanks for tuning in, guys. If you guys have any questions, as always, I always share a lot of my PDFs with a lot of people who reach out to me directly. If you have any questions, I have my content ready to go to share with you guys. Thanks for tuning in. I appreciate everyone's time. Catch you guys next time, and we'll see you there.